Hi, everyone. Welcome back to the Harbinger VC podcast. Today, we have joining us Raymond Yang, who is the founding partner of WestSummit Capital, a leading technology growth equity fund that primarily invests in the US and China. Since 2010, the team has led investments into defining unicorns, including Unity, a mobile game and real-time 3D development engine trading at about $40 billion USD, Segway Ninebot, a Chinese mobility and robotics platform, currently trading about $8 billion, GigaDevice, a NOR flash storage chip design company in China worth about $15 billion, Twitch, everyone's favorite gaming live video platform, which was acquired by Amazon, and more. Before his investment career, Raymond led the turnaround of LinkTone and its successful IPO on NASDAQ in 2004. He also founded Rival Watch, an online market intelligence company, and Saratoga Technology, which was in the voice messaging services space. Today, Raymond shares with us his fascinating story from growing up in Beijing and attending Tsinghua University to moving to Silicon Valley, where he launched his entrepreneurial career. Raymond then describes WestSummit Capital's investment strategy in more detail and shares more insights and lessons learned from key portfolio companies such as Unity. Raymond also shares key success factors for Segway Ninebot and explains the significance of its IPO on a Shanghai Star Board, which issued the first CDRs in China. Hope you enjoy. Hi, Raymond. Thanks for joining us today. Before we dive in and discuss the details of your entrepreneurial career and investment work at WestSummit Capital, we'd like to first learn more about you as a person. Could you share with us a bit more about your personal story first?
Sure, Adam. First of all, thanks for having me here. I'm pretty excited for this podcasting. Actually, this is my first time have this podcasting conversation. Yes, about myself, I was born in Beijing, grew up there, and I went to Tsinghua University there. And after my graduation, I've also got my master there. And soon after that, I came to the US directly to the world of the technology center, Silicon Valley. So that was the late 80s, and I was young, and look back, that was almost 30 years ago. Yes, I then started work for started my career as a software engineer. Worked for two Silicon Valley tech companies there. That was a pretty memorable time if I look back.
Okay, so you went out to the US pretty early in your career, got into Silicon Valley during the initial heyday, so to speak. So could you share a bit more about the companies that you worked on there? Because if I recall, you mentioned to me previously that you started a couple of companies. Could you share with us a bit more about that?
Yes, as I said, I've been working as a software engineer in the Valley for several years. And then after that, I turned myself into an entrepreneur. First of all, I returned to Hong Kong and to work for one of the Hong Kong telecom companies there. Very short after that, I have opportunities to be, I would say, sponsored by one of the US telecom companies to help them to expand their market in China by selling telecommunication equipment. Again, that company is something very interesting because they basically approached me to say, hey, Raymond, we want to open the China market. However, we are lack of the domain local network and understanding the China market dynamics. We need someone like you to help. But I understand the current situation. We cannot hire you because your position was senior enough at the company, at the Hong Kong company. So they suggest to invest a relatively small amount of money into a small company that sponsor me for about a short-term of operation. And then what they told me was that this is the money we're going to sponsor you to start your business. And if you become successful, everybody will be happy. But if for somehow the business doesn't take off, you don't have to pay us back. So I was pretty, amazed at the time. Remember, that was only 1996. So I had no idea what is called the so-called angel investment, because like some people put money into your company. If you become successful, that's great. Otherwise, you don't have to pay them back. So, oh my God, there's such kind of good things in the world like that. So I basically went back to China, started the company. I launched a very innovative market strategy, and in 3.5 years, I become the market share number one market share in China. So that's my first startup. After almost 4 years of this running this business, the time came to the 1999, which was the heydays of the internet. I took the opportunity to go back to Silicon Valley because I still have our little apartment in the valley. My wife and I, we returned there, supposed to take a break for these 4 years of the startups in China, and then this kind of a Silicon Valley internet huge heydays got me so excited. So I jumped into that and started up my second startup called Rival Watch. Basically, we were developing some software to go to the e-commerce website to crawl the website to collect the e-merchants information such as pricing information, product information, promotion information, and slice and dice, and then provide that as a service to any other competitors for them to know their competition's price product information. That's why we call it Rival Watch. Basically, you're using our software to watch your competitions. Yeah, that's a look back. That was pretty exciting period of time, and also that's definitely also the time that made me become a tougher, grow stronger mentally, and also business operationally. I will probably give you a couple of examples during the time of my startup. First of all, there are two co-founders with me, and we've been visiting probably 100 Silicon Valley VCs. And as you know that before we got our VC money, we've been rejected once again. I would remember two very interesting situations. One's that there's one investor basically look at our business plan, threw that our business plan in the trash bin in front of us. They said, Raymond, basically they said, a smart guy like you shouldn't do something like that. This doesn't make sense to me. So that's sort of a VC the way treating entrepreneur. And then there's another case was very interesting. We were in one of the VC's office, and there's only one VC partner there, and listened to our presentation. And then all of a sudden, his phone is ringing, and he took the phone and started talking and walking out of the room. Meanwhile, he's keep telling us, keep talking. So we look at each other and say, "You're the only one. You were walking out of this room. We keep talking to whom?" So that's kind of a funny situation. We still remember very very clearly. But anyway, by the end of our fundraising journey, after talking to probably 100 VCs, we were so lucky to get some very very well known top tier Silicon Valley VCs. And eventually invest the money into our company, and also one of the investors, including this very prominent names called Arthur Rock, who's considered as the father of the VC at in the Valley. So we're so lucky to have this investors to join our company as an investor and the board. So we have quite some journeys for 4 years until the company was merged with another company in the business.
Yeah, and well, first of all, I'm sorry to hear you were treated poorly as entrepreneur. Hopefully, hopefully you're not like that when you talk to up and coming founders, whether it's in the U.S. or China.
Yeah, actually, you're talking about very, very good point. Due to this kind of experience, one thing very, very important in our West Summit, not only I require that to myself. It's a requirement to myself. But there's also something to our younger members. We keep saying that we have to show full respect, regardless in your mind how terrible is their business plan or business model or whatever reason. You have to respect them. You have to treat them as very highly and with your respectful, because that's everybody has gone through that process. It almost becomes one of our West Summit principles of treating and dealing with the entrepreneurs. Actually, is writing in our corporate West Summit corporate culture. There.
Got it. Yeah. Well, we'll get to West Summit a little bit later as we kind of talk through your entrepreneurial career before venture capital. But to your point, doing things the right way does go a long way, and also sometimes having that principle of kind of always consistently doing things a certain way. It's easier just to adhere to it as opposed to kind of changing up based on the situation. So really glad to hear that. Perhaps let's talk a little bit more about the third company you were involved on. Was this Lingtong?
Yes. The third company's name is called Lingtong. And the story was also pretty interesting that after my 4 years of entrepreneurs in the Valley, I finally got a chance to take a break. So I went back to China, basically told myself that, I've been working like so crazy and I need a kind of a break. So I went back to China, and one of the stop there was Shanghai. So I happened to have some my friends there. I haven't seen each other for many years. One of them was the founder of the company called Lingtong, which was in the business we call the mobile value added service business. In short, we call SP, service provider. So he had a dinner with me, and quickly that dinner turned into a recruiting meeting. So basically, at the end of dinner, he offered me to be the CEO position into his own company. And at the time, the company was not in a good shape. So that was a turnaround situation. So I basically using almost a week of time and made my decision, certainly meeting with all their board members, and they've been recruiting CEOs for a while, but after conversation, that decision is made. So I just shortened my vacation, jump into this opportunity to become the CEO of Lingtong. And then interestingly enough, when I had my first board meeting, my subject of my part of the presentation called to repair the airplane when the airplane is still flying.
Right.
Again, this is a turnaround situation. The company is still in operation. It's not like startup, which means very often you're starting from the scratch, right? So you can fix many things, then you start to gradually taking off. But the situation I got into was a company. There was a company in the business. However, it's a little bit like a diving nose down to the ground, as if you view us as an airplane. So I have to put back the airplane and also meanwhile fix that. But luckily, I've put up together an excellent team, and we are using some very creative and also a very bold marketing strategy. And we have really turned the company around in less than 1 year of time. And even by the end of 11 months, I took the company public on the NASDAQ to become the eighth company ever out of China to be listed on the NASDAQ, which was 2004. At the time, there were not many companies listing on the U.S. market.
Right. Yeah, that's really early. I mean, I think many people forget that this internet and venture capital boom in China didn't really kind of take full force until the late 2000s or even early 2010s. But like back in the early 2000s, there was just a handful of Chinese internet companies went public. I think the first one was Xinglang, right? Sina, and then a couple more, and then Lingtong. That's really fascinating. So I don't know the company Lingtong very well. I'm trying to because you mentioned they provide value-added services for mobile phones,
for mobile,
right?
yes. So putting this way, in the early days, the mobile phone could only provide some pretty basic, I would say, services. However, in the early days, the mobile phone has only one function, which is called communication, right? Because making phone calls or send text message. At our stage, we are using mobile phone to provide some additional, we call it entertainment service, which you probably recall the days people have something called ringtone. Remember that?
Yes.
And the people have some phone on the graph, and also something called the ringback. Ringback is something that when you call someone, instead of hearing the ring ring ring, you hear some kind of music play to your ear. And also there's some IVR service, and also the early days of the mobile internet called WAP, W-A-P. So if you combine all those services that offer to the to the consumers, that's the kind of a basic nature of this kind of business. But interestingly enough, the business model is very similar to later days of the Apple Store, which means we work with mobile operators, and then they provide the marketing channels, and then we will share the revenue in, I think it's 15 to 85, that kind of a revenue split. So that was the business model, and that's the type of things we're doing. At that time, that's the early, you're right, that's the early stage of mobile internet, but that was very, very booming. At the time, there were 8,000, maybe even more competitors or players in the space, while Lingtong became the first to go public on the NASDAQ. So we were considered the sort of a China first, NASDAQ, SP company in China. So that kind of thing.
So what eventually happened to Lingtong?
No, actually, I finished my term there for as my CEO. I moved on in 2007, yes, and to join a local VC firm. Lingtong was soon after that was acquired by another, I think, Asian media company. I believe that's one of the conglomerate in Indonesia. They acquired just entirely Lingtong. So Lingtong has become part of some larger corporation right after I took off.
Okay, got it. Okay, so so you got to the Silicon Valley in the late '80s, right? So you spent a couple decades there building stuff in between US and China, and then and you eventually went back to you mentioned 2007, was it? So you started investing, and the vehicle or the fund you invest out of now, you're the founding partner of, called WestSummit Capital, and love to hear more about it and learn more about the fund from you. From my knowledge, I've heard that WestSummit Capital, it's done some really incredible deals, both in the US and China, and the returns have been very, very good. Could you share with us a bit more about WestSummit at a high level? And perhaps we can talk through some of the portfolio companies that you invested into.
Yeah, sure, certainly. WestSummit is the technology-focused early growth capital, has global perspective. Let me explain that a little bit. First of all, we are one of the funds in China focused in investing in the technology sector. Remember that in today's world, it is pretty common. Everybody say, of course, that's the technology changing the world, technology changed people's life. But back to 10 years ago, we started our fund 2009, 2010. And that we have a vision that we believe because our team, I'm one of the co-founders, and our team is having a very similar background as myself, technology background, strong operators, and Silicon Valley, China, so on and so forth. Therefore, we have a strong believe that the technology is changing or will change the world and change people's life. So we want to use capital, we want to use fund to enable those great companies in the world. Also, at at the time when we start our fund, and we see an opportunity that the international, I was called global companies, are also treating China as a marketplace for expansion of their business. That's why we set out to have the investment strategy investing in both Silicon Valley and China, and try to be sort of a bridge by leveraging our knowledge in China and also the capital to help Silicon Valley companies to expand their business in China. Certainly, at the same time, the Chinese companies going globally. And so that's our very early stage vision. Certainly in the last few years, and we are focusing on investing into China more and more. Talking about the fund performance at a very, very high level, hopefully I can share some not that much confidential information. WestSummit has run several funds. In our two funds, we have vintage year 2010. So far, we have achieved almost 40% IRR for 10 years, and the MOIC is 19 times, and we achieved more than 1,000% DPI. Okay. And for the fund two, I think that's the one vintage year 2013. Again, IRR 41% as of today, and the fund level returns almost 9 times MOIC, and close to 100% of DPI, and which will be in the next couple of months will be reached to 200, 300% DPI. So that's again in the high level. So we are very proud of our team. We have an excellent team and in China, and we are again very cohesive, very complementary. But also more importantly, I believe it is our patience, it is our determination that we like to focus on invest into technology. At the same time, we understand that many other China-based funds are really focusing on investing into so-called the B2C consumer model innovation, and we are more like in focusing on technology innovation. Again, 10 years journey is pretty long journey. Once we start our fund at the early stage, we were pretty lonely because everybody else is investing into some hot deals in terms like like the Bilibili or TikTok and or Meituan or Ele.me and so on and so forth, which it is a good period of time. But we've been always focusing on investing into technology for the last 10 years.
Right. Yep. Let's definitely dig a little bit deeper there in a bit because, to your point, a lot of the Chinese funds that have generated high returns for LPs have focused on consumer internet, but there's been a bit of a shift towards B2B enterprise cloud, and not just that, but also kind of hard tech. So, semiconductors, chipsets, sensors, and things like that. So let's step through that in a little bit. But I think I'd love for the audience to learn a bit more about your investments to date and also some of your portfolio companies. You mentioned the return profile of your fund. I mean, those are just kind of ludicrous numbers. Like those are really high returns. And you kind of compare that to any of the best performing funds out there. So you mentioned that for your fund two, that DPI is reaching 100%, and within a couple of months is going to be like 200 to 300%. I can only imagine what companies are driving that. So I mean, I've been following a company for a while called Unity Technologies, and I know that you're the leading investor in your Series B. So they've been performing extremely well. I mean, what is their market cap now? Like $41 billion or so.
Yes, about right. Yes.
Okay. And I think they went public. Right, they went public a couple months ago, so maybe they're nearing lockup. So hopefully that generates returns for your fund. But can we spend a little bit of time on Unity? I think it's a very interesting model, right? The way I understand it is that they're a game engine primarily, and they enable a lot of developers to build games more easily and efficiently. So a lot of these are mobile-based games. But I think they do a lot more than just helping developers build games. I mean, you would know this better than than any of us. Could you share a bit more about Unity, what it was like when you first invested, and then how they evolved over time?
Sure. Yeah, that's a very, very exciting a company and deals that we are so fortunately that able to have this opportunity to invest into this company. In fact, we invest in this company in 2011, and we were at the time we were the lead investor of Series B. Sequoia, Silicon Valley, Sequoia was the lead investor in Series A. We were lead investor in Series B, and we and personally myself as since sitting on the board of directors for almost 9 years on the board with all the top tier Silicon Valley VCs, and again, this is a exciting and wonderful journey. I've looked back. Talking about a company that's also very interesting because it is almost like a classic startup or investor license. And if you look back the way the company has grown up, again, like many other startup companies, Unity started in the almost like a garage in the Silicon Valley. We always talk about something startup from some kind of garage. But this Unity started company in the basement in Copenhagen, one of the apartment basement, with three brilliant young entrepreneurs. So they have a vision that they want to change the world and change the mobile game, the way that has been dominant by larger mobile games, which have been very expensive, very awkward to use, and also has to run on pretty heavy machine. So they want to create a newer version, and also they want a lighter version, and also they want to create the mobile game engine that can be with one button push, can be seamlessly to port to many other different platforms. As we know, at the time, there's many different mobile game platforms, right? Like iOS, like Android, like Xbox, and like so on and so forth. So anyway, they start with that kind of a vision, and then they've been doing quite well until they received the capital from Sequoia, and then they moved their headquarters from Europe to San Francisco. So that's basically they become so-called the Silicon Valley startup company. But if you really look back from the early days of the company, one of the big arguments at the time, and it's also interesting point to look at and to discuss, is that when our business is, at the time, their business is to provide software to game developers, which if you put the jargon called B2D, right? Because we have a B2C to consumer, we have a B2B to business. This is the business, they offer something to B2D. So you could easily ask a question at the time to say, wait a minute, this is how big that market can be, right? Because developers in this, I mean, it is a pretty sizable market if you count every mobile game developers in the world. But still, people could easily argue, oh, so what? This is small, relatively small sort of a market size to go after. But if you look back today, Unity has, I would say, evolved himself from a niche mobile game engine providers to become, we call this real-time 3D software company, which is huge, I would say, morphing from a niche company to go and more diverse their business scope and their more technology and the product offering. So thanks to the business evolution, which the license learned is that from just investor point of view, we always say something ourselves and say, oh, we need to invest in a company going after a huge market, right? This is almost like every investor's dream. Yes, that would be nice if you can have something like that. However, for Unity case, it's almost like a reverse. You can also call that reverse cake. You start with small cake, then you build on top of that a bigger cake and a bigger cake and bigger cake, and go the reverse way versus, you start with going after a big a pie or big cake. So this is very interesting. You look at how Unity grow from only offered to the developers, but later Unity start offer something in the advertisement for the mobile games players, and that all developers, which also expand their revenue stream, which means not only from the software but also from certain of the advertisement of the mobile players. And then later they go even bigger to say we are creating the software offer to every creators in the world. Yeah. So that's a very interesting journey. But also, if you look at it from investment point of view, you look at it from startup point of view, it's also sort of a reverse of the a conventional thinking, I would say. So that's one of the very interesting lessons learned if you look back.
Got it. Yeah.
Yeah. The second thing I think about the Unity is also, I also watch the company grow from the so-called infant stage to the adult stage. Certainly, they're still growing, right? Which means that they're, again, as I mentioned, that the company was started by 3 very young and brilliant entrepreneurs out of Europe, and then almost right after our investment at Series B. That's something like 2011 to 2012 timeframe. Company has introduced into a professional management, which is the current CEO, John Taylor. I would call him JR. This is again typical. I would say the milestone of the growth of the company from entrepreneur dominant or operate company to the professional, seasoned, experienced professional manager operate the company. So this transaction has been very smooth and nice, and also that's another important milestone to ensure the company to grow from not only from 0 to 1, but also from 1 to 10. So I think this is another amazing step that company has taken, and also another license learned that how you watch some company, how company could fail due to the entrepreneurs, their lack of experience or their lack of the embrace to the more experienced professional managers come to the company to make company grow, become more mature.
Right. Definitely a very interesting company. And to your point about continuing to grow its addressable market from selling this software that enables game developers to kind of providing that software to other types of content creators. I guess you're referring to animators, right? Like folks in education space, in animation world, creating
basically the new slogan of the Unity is the world will become better place with Unity for almost every creators. Doesn't matter what kind of sector. And then that's huge opportunity, because the world become more and more, I would say, the digitalized. And then many things that used to be done in the traditional way, but now can be digitalized to present. So and this is now give Unity a huge opportunity to apply that the software to for this one. So it's definitely morphing itself into much broader and deeper base of user base.
Right. Yeah, it's very interesting. I mean, even within gaming itself, looking at the gaming space, a number of game relevant companies are growing very quickly, whether it's the game engines like Unity or the Unreal Engine by Epic. And then you have some of these other gaming players who are building other engines on top of these kind of foundational engines or other types of tool sets. For example, as these digital worlds get bigger and more sophisticated, I think the Unreal Engine is pretty good about that, but it doesn't provide full flexibility and like custom end use in terms of building up like even more detailed kind of environments or elements in some of these worlds, or like some of the characters you see in games, they can be made even more realistic. And I think you have like other players that are basically building on top of existing game engine infrastructure to allow that. So I mean, I see even within gaming, there's a lot of stuff going on. If you apply that to other areas, education, animation, other types of content, to your point, I just feel like there are so many different growth areas. And perhaps that's what's driving a lot of interest in companies like Unity and driving its market cap extremely high. I think I just checked, it's around $41 billion value or market cap.
I haven't tracked the company for a long time.
Right.
You know, we first of all, I stepped down of the board of director right before the IPO. As you know, normally the VC would no longer sitting on the board when company become a public company, because the company needs to bring into more independent board of directors and form different kind of committees, so on and so forth. But anyway, so I haven't even personally tracked these stocks, but I know just remotely watching the company. Yes, it's pretty amazing. Yes.
Did you expect them, or did you think they had a chance of becoming a $40 billion company when you invested back in what?
Yeah, we didn't put our mind on that subject too much. Yeah, it's good to see them. I know, but we're not sort of tracking the daily stock fluctuation type of things. That's not our.
I see. Yeah. Answer like a true VC.
Yeah, that's right. Yeah.
Okay. So so Unity is very interesting. Also wanted to learn a bit more about another investment that you made, which is Segway Ninebot. And I mean, this is a company that is pretty close and dear to my heart, because when I first went out to China, I spent some time with Shuangwei Capital, and it's pretty closely affiliated with the Xiaomi ecosystem. And Segway Ninebot came out of the Xiaomi ecosystem. There was a Chinese company called Ninebot, and then they acquired Segway back in 2015 or so. And I mean, they've done very well for themselves. They're selling these like so-called hoverboards, and they started selling electric scooters. They were supplying that to Bird, to Lime, all of the large operators, and their revenue really, revenue growth really accelerated. And they went public at the end of last year. So, anyways, really fascinating company. Love to understand WestSummit's take on Segway Ninebot. When you invested, why, and how do you feel about the company's growth?
Yes, actually, we invest in the company at the same round with Xiaomi and also Sequoia China. So we call it Series A or Series A Plus or something. Basically, all three of us, we are investing at the same round. And for us, is that we are very anxious at the time, and also pretty excited about the opportunity that the Ninebot to acquire a U.S. company, Segway, as you know, that which is a Boston-based company. But Segway is a company with lots of legacies, and also lots of exciting story behind that, with their own business ups and downs. But regardless, this is almost said a very good example for a Chinese company to acquire a U.S. company or global company or global brand, and to combine the brand name, the many years of the industry experience of the Segway itself, and with the China market, and also the engineering and the manufacturer capability, to make that a much sort of a 1 + 1 greater than 5, not even greater than 3, right? Kind of a merger acquisition. So that was I would say one battle claimed the winning of the war, basically, because after acquisition of the Ninebot acquiring Segway, the war in this so-called scooter war in China is basically over, because people start to focus on the brand, the quality, and also certainly the many years of the experience of the craftsmanship of these making this scooters, so on and so forth, to make sure that's meeting to the very high standard, industry standard. And also, I think the founder is they're very, I would call forward thinking, and the CEO and the founder have a very big vision. And then they quickly turn something kind of innovative. Because if you really look at those kind of scooters or sort of balance, that's kind of a novelty things for you to have, for kids to have fun. But they're able to again to evolve and to expand the business into something called micro mobility. And then quickly the company also get into the robotic area. So not only currently the business is in the micro mobility. If you look at the early days of the Lime, the Bird, and like kind of a sharing scooter model, many of those depends on region, depends on country. Many of those scooters are made by Naibot, and certainly in China, Naibot Segway. And especially nowadays, given this COVID pandemic situation, people are tend to be more avoid the public transportation. They want to get on their own sort of a short distance micro mobility things that will give another jump or push to the business. But the company continue to grow into their next generation, which is something we call smart moped. Basically, they want to be, the way I put that, almost like the Tesla for the e-motorcycle, that kind of things. So if you look at their newer version of the e-motorcycle, it is such amazing the way the smart feature they put on this one. It's just so amazing. Not only the style wise is very sleek, very trendy, beautiful, nice, but also many smart features such as you do a keyless of and turn on the motorcycle, and some motorcycle can come to you by itself. You think about that's like a magic, right? The motorcycle will come to you. And then many things like that. So it's a very exciting company.
Yeah, definitely. Totally get what you mean. And I was there on the ground level in the trenches too, in terms of selling some of these products globally. So whether it's they had a consumer robot called a Lumo, and then they had this delivery robot focused on China. So Yes. And then the recent e-motorbikes that they've been selling, globally essentially. And something to share about Segway Ninebot that I found very interesting about them, like they're very scrappy and commercial minded. So I'll give you an example. They learned to do crowdfunding campaigns in the US. They were using Indiegogo primarily. They sold a robot through that, and they also sold doing something like called a go-kart, like a toy go-kart. They're also selling other products through that. So like whatever they learned to do, they kind of push their quality product through those channels. They also use some more conventional sales and marketing methodology as well. So it's fascinating to see kind of how hard these Chinese companies work, how innovative they are, these various ideas they have, continue to manufacture quality product, mobility product, but also investing in R&D for autonomous delivery via the robot. And then they apply that AV capability into some of their mobility products as well for the end customer. So I think that's all very interesting. And then I would say one other thing to mention about them, I'd love to get your view on it, Raymond, is they went public last year, but it was a big deal because not only did they raise quite a bit of capital, and they're about like $8 billion valuation now, but they went public in China. They are a VIE structure company that went public on a starboard. The
NASDAQ,
how do you say English?
NASDAQ over China.
Let's just call it NASDAQ. That's right.
Yes.
That's right. The starboard. Yeah, and that's the first. It's the first CDR, first China depository receipt ever. Could you share with us a bit more about that? Like how did it happen? Views on what that means for investors and for entrepreneurs.
I think yes, that's a very interesting story because they're the first one to be able to list on the Chinese so-called the NASDAQ of China, the starboard, which is designated for the so-called the technology companies. And in the early days, because there are lots of Chinese tech companies, even in the internet space, they are able to grow their business very rapidly and grab the market share. However, they can't guarantee they will produce the profitability. And as we all know that on the Nasdaq, you can get listed. You don't have to be a profitable company. However, in the early days in China, the government restriction for company to be listed, they require for certain years of profitability. So on and so forth. It is almost a huge challenge,
Right.
where it's not almost like very impossible for startup at very early days to reach Taiwan. So people tend to go list overseas, in the U.S. So therefore, they create something called VIE structure, which is an offshore structure. I think the major change for Startup Board to allow the CDR and with NIBOD Segway as the first one ever has really opened a big door for the similar situation and encourage the Chinese tech companies to list in China on the Chinese Startup Board, as well as the companies no longer need a profitability to be listed. So I would foresee, even I know it's not there yet, and even go further, there will be potentially more and more international companies come here to list on the Startup Board. Certainly, there will probably a few years to go, a few years to come, or but I foresee that, which can be very fundamental. Basically, you're really creating another Nasdaq of China, right? That's the situation. So I think following the NIBOD Segway, we're seeing more and more similar tech companies that will be listed on the Startup Board, which is it's good thing for investors. Another good thing about the Startup Board is they also learn from the Nasdaq so-called the lockup period. As we know that Nasdaq has 6 months lockup period, and then Startup Board has 1 year lockup period. If you consider other board in China, like A-share, like GEM board, this is a much I would say investor or entrepreneur friendly policy, which basically 1 year is bearable length of time, and which is fair, that because you don't want people to be really just get on get on the board and sell the stock and run tomorrow. But on the other hand, it gave the exit window for the VC firms, VC investors, a much friendly liquidity opportunity.
Right. Yep. Some of these developments, they're happening at a fairly rapid pace, right? Like some of these financial liberalizations, you don't expect to occur in like a couple years time, but like I think China has really kind of emphasized this, and they've been working really hard to change some of these policies and then enable more liquidity in the local market. So I think there's a lot more we can discuss on this point, but I think perhaps for today, I think it is very interesting to note that VIE structure companies can now go public in China if they meet some other kind of requirements. So back to WestSummit, Raymond. So we talked through some of your portfolio companies, which are quite interesting. You were mentioning earlier that WestSummit pursues a strategy of investing into technology-driven companies. So like kind of core technology companies, more of a B2B kind of enterprise industrial focus. Could you share with us a bit more about that? Because you were saying that many funds in China do consumer investing and they're kind of shifting to B2B, whereas you've been focusing on this area for a while. Could you tell us a bit more about kind of what areas within the space that you focus on, and what does your team look like that enables you to invest well in these areas?
Yes, WestSummit's investment focus is in the technology area in general. In the term that the VC like to use, we always call TMT, right? So we always saying that if you talk about TMT, we want the T is a capital letter, is a big T. So that's the technology. For some people, when they talk about the M, which actually been using for the same name as the internet. So, however, I've seen that giving these the many drivers in China today has pushed this big wave, so-called the technology innovation wave, is coming versus than 20 years ago. Including myself, was there for mobile, for internet, for mobile internet, for consumer business model innovation for the past 20 years. Great opportunity, and also create lots of great companies as well as great venture firms there. So going forward, the trend I'm seeing is that it is the wave we call the technology innovation. And also, I believe that in this big wave, we are going to see, again, 10 years, maybe 8 years, 10 years, 15 years, 20 years down the road, we're going to see many, many huge successful companies, almost like the Alibaba in the technology space. So if you look at what's going on in the US, and you see more and more so-called the technology companies and B2B companies grow, like Unity, we just mentioned that. This is almost like, China is a step behind that kind of trend, but maybe 10, 15 years later. But however, this trend is coming. And WestSummit has a big vision that we believe in, as I said, from the early days, we want to invest focusing in technology because we believe that will create huge value, changing the world, changing the people's life. But if you achieve that goal, the market is going to reward you. That's why you see the company we invest into this space has become very, very successful. And also the tech space investment compared with the consumer innovation, business model innovation investment actually is quite different.
Right.
I would see many people haven't really realized that. They say, oh, you know what? This investment. Yesterday I was investing into internet consumer business model. Today I can invest into some technology innovation. Actually, that's not necessarily the case. I give you an example. If you think about it, if you have a VC team or firm has the team background, DNA, that in the area of investing into something called TikTok or Bilibili or Pinduoduo or so on and so forth, or Ele.me, yesterday, today, if you are turning your head to say, okay, let's do something called FPGA, let's call something called NoSQL database, let's invest in something called software-defined WAN, so on and so forth. You could imagine how hard it is, how big the barrier to entry is that, and how deep the learning curve is that. So also the DNA of your team would be completely different, number one. Number two, if you really look at we have done our internal study, which shows that if you are investing into right B2C company, the company could take anywhere from 3 to 6 years from their starting inception to be an IPO company.
Right.
Okay, there's many, many examples like that. However, also our internal study shows, for average life cycle for successful technology company, the life is about 16 years. Okay, you look at Unity, it is 16 years. You look at our Giga device, it's 13, 14 years. So if you think about that, if you take this kind of mindset, if you say, okay, I'm investing to early stage companies, your fund life is about 10 years, but you're investing into a company that have 16 years, how that would work out, right? Number one. Number two, the B2C company, normally, one thing is very critical, which means you have to address something called hit the sweet spot of a market need. In our jargon, we call it make sure the dog is eating the dog food. Right? If you offer something called the OFO or MOBAC, or Ele.me or 大众点评, so on and so forth, which really address some consumer market needs. And if you execute well, you're taking off. However, in the technology company, you need at least 3 major steps, which called you need to make sure the technology is there and is working. You need to make sure the product is there, is working. And the last is that the market has to be ready for this one. As we have seen many, many cases in the past. I give you a couple of examples. Do we remember the days? There's 1 year, people believe there will be a huge market called 3D printers. Remember the years? There's 3D printers, right? Where's the 3D printers? Remember the years that after 3D printer called wearable devices. If you go to CES, probably 1/3 of the expo is wearable devices companies with all the different names. Where do those companies go? And then right after that, do you remember the VR AR time? There's people so crazy. I even remember days that the VC line up in of the VR AR companies' doors to say, "Hey, take our check." That's different because invest into tech companies, you're taking different kind of mindset, taking different kind of a domain knowledge, taking different kind of a strategy. There's a huge learning curve there, and we are there. We've been doing that for over 10 years and proven ourselves. That's what I'm saying. You have to give them some different perspective of not just something. Okay, this is investment. We go do it. I think that's you can have some issue there.
I see. That makes sense. And as a last question, just kind of digging a little bit deeper on this area. You mentioned that for some of these truly technology-driven companies, it takes like 10 plus years, 16 years, to your point, to really truly develop and go public or be acquired or what have you. So for WestSummit, so based on my understanding, you're not a super early stage VC, right? You don't do seed or Series A, but it's more of a kind of an early growth or growth equity type of entry point. Could you talk a little bit more about that? I mean, is that why you chose that entry point? Because of what it takes to invest in, because of what you described about tech-driven companies? Like what is the rationale there?
Yeah. The couple of things I can talk about that. First of all, as I mentioned, that the tech companies need 10 plus years from their starting point to the time their IPO. Actually, if you look at their first, our internal study shows that they're on average the first 6 years of the tech startup companies are the ones that they will have a very much try and error and a bumpy road or do or die time. Because very often you come up with something is technology is not working, it's not there, the product is not there, so on and so forth. So we call that period of time is so-called death valley. So many startup companies just fall under during that period of time. So WestSummit's investment strategy is such that we do not want to deal with those kind of situations. We rather to be wait behind one company become a so-called inflection point. Once the company hit the inflection point, they're facing a trajectory, very exponential growth rate. And that's where we start to consider our investment. And again, as I said, we're going to examine to see whether the technology risk is, technology is proven, whether it's product proven, whether the market is proven, and whether they have generate some real revenue versus some kind of a fake revenue. Sometimes, the customer will give them some NRE, meaning the money to test your product. Doesn't count. So that's where we start to look at the companies. Also, our approach is something we call the sniper approach versus spray and pray. Many VCs in this industry, they're taking the so-called spray and pray. They're just bet on every track, so-called in the horse racing jockey situation. Again, that's not what Summit does. So that's a pretty unique approach. We like what Bill Gates has quote. Bill Gates said, people tend to overestimate the technology in the next 2 years, but tend to underestimate the technology or the new things in the next 10 years. So actually he's saying is just reflect our philosophy of our investment strategy. So we try to avoid this kind of the so-called the crazy time, or also the buzzwords of this chasing those kind of big fancy concepts. Yes.
Mm-hmm. Got it. Thanks for describing that. Investment methodology does make sense, and wish you and your team well when it comes to China tech investing for your current and future funds.
Thank you, Adam. Thank you again for having me here.
No worries. Yeah, thanks for your time, and we'll be in touch, and maybe we can have another conversation in the future.
Certainly. Thanks.
Okay. All right.
Bye-bye.
Bye, Raymond.